Cyber is a risk that you can't control. It's not a geographical risk. It's not in your local suburb or your state or anything like that. It's literally an international risk, and it's intrusions into people's computers and so forth, and data stealing and so forth. It's increasing exponentially. And obviously healthcare is an extremely attractive business, or certainly the data that you hold in a healthcare environment is extremely attractive. It makes you a bit of a target. And general practices just don't have the budgets to have enormous cybersecurity systems and so forth. It's something that it's becoming almost you must have that policy.
Practice owners, if you're looking to unlock an extra $50,000 in profit, build a high-performing team, and reclaim 5 or more hours a week, then you need to join me for the 5-55 challenge. From the 24th of March to the 28th of March, 8 a.m. to 9 a.m, 1 hour a day. In just 5 days, I'm going to show you the exact strategies successful clinics use to increase revenue, fix recruitment struggles, and optimize pricing without adding more work. Spaces are limited, so click the link in the show notes to secure your spot and start transforming your practice today.
And welcome back to the Skyby Clinic podcast. I had an investment banker friend who said to me, the first rule of business is not to lose your chips, i.e. don't lose your money. And insurable risks are certainly one way that you can do that. One of the challenges with insurance, and as a kid, I grew up with insurance in my household. My dad did insurances, life insurance, etc. Not general insurance, life insurance mostly. And the problem with insurance is that it's a lot like a parachute. By the time you need it, if it's not up to scratch, you're in a lot of strife. And a lot of us can see it as a grudge purchase. So what I decided to do is to go out and find somebody that lives, eat and breathes insurance. And so today I'm really pleased to introduce Caroline Holland from Docinsure. Welcome to the podcast, Caroline.
Hi, Todd. Thank you.
Pleasure. Now, I'd really like to kick off and hear from you the things that are frustrating, and you come into circumstances where maybe people have made mistakes or they've made errors. What do you consider to be the common mistakes, common problems that people have in choosing insurances, particularly in the environment of general practice owners?
Okay, so general practice owners are like a lot of businesses. It's a business. So ideally, the two biggest issues that I come across are underinsurance or not having appropriate insurances in place, and the old saying, it'll never happen to me. They're the two big things. And clearly, obviously, if you're underinsured, that's an issue because you've got no parachute. And if you actually believe it'll never happen to me, it'll happen to you. It's just Murphy's Law.
100%. Could you give maybe a couple of examples of where you've come across people where they've kind of thought, look, and some of those people think, look, I know I need to do this, but I'm going to do it a bit later. Could you share a couple of examples of where you've seen events that have kind of, had they been addressed earlier, those risks that they may not have caused the damage they did?
Obviously, healthcare is an essential service. And if something goes wrong with the business and it's an insurable risk, let's say, for example, the loss of a roof or something like that, and you can't trade in your normal environment, then all of a sudden, patients stop walking through the door and so does money. To deal with that, we will put in place business interruption. And I had the unfortunate experience to deal with a client a number of years ago now who was in that situation and had quite a large loss, and it was going to be a significant period of time until he could start to trade again or even see his patients. Even it was an asbestos risk, so getting into the practice was an issue. He basically, the whole place was locked up, couldn't get in there. It was weeks until we could get in there, but he had actually underinsured his income by an entire zero. So, and the issue with that is obviously business interruption and building insurance and so forth, we have a clause inside the policy for underinsurance. So if you underinsure your income or your building or your assets, then the insurer has the right to reduce your claim value by the percentage that you've underinsured. So if we're talking a zero, and it was 2.5 million versus 250, the poor man got next to nothing. So that's obviously extremely disheartening, but it causes other issues as well because we had staff that we had to pay and so forth. So he really had to put his hand in his pocket for a lot.
Yeah, and beyond that, a workforce, so probably 5 to 10 years of building a business is out the door because of, in that period of time, the patients have to find alternative care. The doctors most likely will be leaving as well. That's a pretty scary risk. Just to maybe put that into some kind of context, we understand the kind of size of the loss. What would have been the size of the premiums that were required to protect that person from that type of risk? And understand this is not a circumstance. I'm not asking for a quote as such, just talking ballpark.
Matter of a couple of $1,000s.
Okay, well, that's a really good transition into, we talked a little bit about underinsurance. That's a really great example of that. Obviously, kind of where people choose not to insure, that then the circumstances are only worse and you have no one in your corner kind of helping you out. Let's just talk a little bit about a structured approach. So let's pretend that I'm a new practice owner and starting to get my ducks all lined up. What do I need to be thinking about? And how would you approach all of the insurances that we need to get, and making sure they're a little bit like pieces of a jigsaw puzzle, right? They need to fit together nicely because we don't want to end up with that kind of hardware software battle where somebody's saying, well, that's not mine, that's yours, and things falling through the cracks there. So let's walk through the structured approach that you use.
When I first meet someone who's new to business, there's a couple of areas that we probably need to look at, and that's assets. So that's what we talk about before with buildings, property, contents. Income is an asset. And then you move to liability. So we've got your public liability. That's obviously people risk, people coming into the practice and hurting themselves. We've got another type of liability for staff, obviously work cover, but there are other areas where staff can be an issue. So we've got employment practices liability. That's certainly something that any business operator should have in place. And obviously you've got, in a medical environment, we've got a patient risk. So harm to patients, another type of liability. And then there's the other types of liability that can have an impact on your business. They're not a go-to, that people don't think about that often. Cyber liability and management liability. So that's all of the things that I would go through with someone who's new in business. And a lot of people who are starting up, I appreciate that there's not a lot of money in the kitty, but you need to go through those different risks. And what can I self-insure myself? Or I'll take the basics this year, and then next year as I grow, I need to be looking at moving into having more protection. And that's part of the problem. A lot of people start out with the basics and they just never move into that next step to cover off on the bigger risks, financial risks that can cause them a lot of issues.
And I think one of the challenges for people when they start is it may well be that they have fairly large loans. And so if something affects their capacity to earn the revenue or for people to come through the door, then they still have the same obligations and responsibilities to their lenders. They're not likely to say, oh, no problems, don't worry about that.
Yeah, that'd be nice, wouldn't it?
Yeah, it would be nice. I've not heard of that luxury being extended to people. Maybe what we ought to do is just step through these and just talk a little bit more detail about each of them. I think we can safely remove the medical defense insurance, where people would typically be pretty aware of that. I think in most cases that would be well covered for the risks that are associated with running the practice and recalls, reminders, all the things that go with that. But perhaps the other ones we could go through that would be useful. And public liability, if we could, I'd love to talk about that from two perspectives, one from the owner's perspective and the other one from the perspective of the independent GPs, because this is something that's often overlooked for them, having their own public liability insurance. So let's go through these in the order that you'd like and just talk through what they cover and where they overlap others and some things that we need to be considering for each of these types of policies.
Hey, if you're a general practice owner, I have a question for you. What would an extra $50,000 in profit mean for your practice? More stability, more freedom, more impact? In just 5 days, from the 24th to the 28th of March, 8 a.m. to 9 a.m., that's 1 hour a day, I'm going to show you how to find $50,000 hidden in your practice, build a 5-star team, and free up 5 or more hours per week. No fluff, just real strategies that work. We're only taking a limited number of general practice owners, so click the link in the show notes and join us now. It's your chance to take control of your practice's future.
Okay, obviously your property insurances, they tend to be weather related. So we're talking about storms, cyclone, flood, and so forth. And I think everyone has a good understanding of what they're about and that they actually need them. Because as you said, if you do have a loan on assets, your bank is requiring you to have that in place. And I just wouldn't have a loan over a really large asset without having some backup like insurance in place. It's just one of those things. Your public liability, so Public liability is injury to the public on your premises as such. So someone tripping over some carpet, someone slipping on the floor in the loo. There's lots of things that can go wrong inside an environment that's not medical, that could cause harm to someone or loss to someone. With regard to practitioners having their own, there are insurance policies that have what we call cover for others. So depending on who the insurer is and the product that you have in place, there may already be some part of the policy that will extend to cover your contractors, but only while they're doing work for you and only on your premises, and usually if they're 100% beholden to you. So if they were to practice at several other practices, then they technically probably should have their own. That's probably a discussion that should be had with your broker, and you really need to be aware of how the policy triggers and responds for you to not have your practitioners have their own liability. But again, I mean, if I was in that in situation, and maybe it's just a case of I know more than the average person and so forth, I would have my own anyway. It's my policy. I get to control it. The insurer is always going to be looking after me. So as opposed to attempting to get cover under someone else's policy.
Yeah, in terms of just the cost for it, it's a relatively inexpensive insurance, and it's usually stipulated in the service and facility agreements that the independent GPs do require it. It's just commonly overlooked because people don't seem to understand the issues with that. And we won't spend too long on that because it's probably not as important to owners. But let's talk a little bit more about the other types of insurance you talked about. You mentioned business continuity insurance a little bit earlier.
Business interruption. So if you have an insurable claim under your property insurance, so for example, some damage to the practice or a lack of access to the practice because of something that's happened in the street and so forth, you can insure your gross income. And I always say accent on income, not profit. Because in this particular industry, it's a service industry. So you're not buying a bottle of Coke for $1 and then selling it for $2 and making a profit of $1. Everything that's walking through the door is ultimately profit. There's very little what we call cost of working. So really, you should be insuring your whole income. And if you can't trade, or you're trading at a lower capacity, you can make a claim against that portion of the policy as basically a top up or replacement of your income, so that you can carry on to pay the loans, pay any leases, continue to pay staff, because staff are very hard to get and you don't want to lose the good ones. So you can keep them on the payroll. And then ultimately you get your profits as well. But really what we want to do is we want to keep you working, because if you close your doors, patients move away, they fall in love with other doctors and never come back. So there's another component inside that portion of the policy called extra cost of working. So it is literally the extra cost to keep the doors open. So we might literally pick you up and move you down the street, 2 streets over in the same suburb, and get you trading, even at a lower capacity, so that your patients have got somewhere to come and see their favorite doctor. And that means that when it all happens and you get your own premises back, you've got less of an impact on the business.
Right. I think that's a really interesting idea. If we go back to the example you talked about with somebody who has revenue of, say, 2.5 million, working with lots of practice owners, there might be people that's taken them 5, 8, 10 years to get to. And to start from zero again would be incredibly distressing. Imagine starting a business with brand new staff because they all thought, look, I don't have reliable income here, and a brand new clinic, everything brand new, and a pause of somewhere between 3 and 6 months. It just would not be a great experience at all. So this sounds like one of the insurances that is an absolute must. All right. What do you want to move to next in terms of the insurances we need to be thinking about?
I think so. There's 2 particular insurances, and they're relatively new. When I say new, they've only really been around for probably 5 to 10 years. One is management liability and one is cyber liability. Cyber is a risk that you can't control. It's not a geographical risk, so it's not in your local suburb or your state or anything like that. It's literally an international risk, and it's intrusions into people's computers and so forth, and data stealing and so forth. It's increasing exponentially. And obviously healthcare is an extremely attractive business, or certainly the data that you hold in a healthcare environment is extremely attractive. So it makes you a bit of a target. And general practices just don't have the budgets to have enormous cybersecurity systems and so forth. So it's something that it's becoming almost you must have it policy. And I'm surprised at the number of practices that don't. So anyway, that's certainly something that, in my opinion, is an essential. So it covers obviously intrusions into your computers, like your denial of service attacks where everything just freezes and you just can't access your data, privacy breaches and so forth, fines and penalties. It used to be quite an inexpensive cover. And I'm not saying it is expensive these days, but certainly if you have to pay $5,000 to protect your data to avoid a $2 million fine, or for that matter, your practice being down for weeks at a time, it's not a bad trade-off.
I think the other thing that probably is worthwhile as part of this is that the insurance is conditional upon certain things being in place. And so the clinic itself will probably, just through engaging with and obtaining that type of insurance, actually have better defenses than what they might have otherwise, because they will need to work with their IT providers to make sure that they've kind of got the appropriate minimum standards in place.
Yeah. And a lot of people think that if something like that happens, then they can fall back on their IT provider's insurance. No, it doesn't work like that. It's not their fault if someone clicks on an email and allows a virus or a criminal into the system. It's not the IT guy's fault. So that's a myth that I have to dispel quite frequently. And you are correct that you do need to have certain things in place. We need to have two-factor authentication. Their passwords need to be changed frequently. There needs to be training of the staff of how to recognize particular types of intrusions and so forth, emails, what to do with them, so forth. Yeah. So
all of which just elevate and make it more difficult anyway. So the whole process is beneficial. Again, just one of these things that can take you out. The closer you are towards exit in your career and your business life, the worse these things are. And so I think it's really important to make sure that you are protected. As you say, there are people whose literal profession is hacking other people's systems. Think of this like you and I are old enough to remember the club lock days. You remember club locks in cars? It used to be this thing that you stick on your steering wheel.
Yes.
A really, really ugly thing. And it was never really designed to prevent people stealing your car. It was just there to say, this is going to be harder to steal than most. So maybe go and look somewhere else. In my mind, how cybersecurity works, if somebody really decided they wanted to, with the tools available to them, they probably could. But what you want to do is make sure you don't make it too easy for them. Don't leave the doors open, the keys in ignition, and then wonder why someone stole your car kind of thing.
Yeah, that's true. But I mean, like that data, that personal identifiable data and the stuff that you find in patient records, yeah, that's super attractive and it's worth an absolute fortune on the black market. And then from there, you have flow-on issues of people's identity being stolen and so forth. And not only does it cost money for the business, but it's just embarrassing. And people, the lack of trust that creeps in when that happens to your business from your patients or your consumers or your customers is just amazing. It can be so detrimental.
True, huge reputational damage. You can almost guarantee that you'll be on the news, in the papers for all the wrong reasons. And so that's an important one. Let's move on to management insurance. If you could talk a bit about that, one of the newer ones.
Yeah, management liability. Now, this is effectively just a beefed up deal, and they have been around for decades. And typically, the Rio Tintos of the world would have a D&O 20 years ago. These days, there's been a few insurers that have come into the market with a smaller version that's suitable for SMEs, and it went from a D&O to a management liability, and it's pretty much as it's described or sounds. It's about the management of your business, the Corporations Act, and the things that you have to do or are responsible to do under the Corporations Act, employment practices. So there's the employee risk. And then, of course, we've got other things in there like fidelity, so theft of money internally, and protections for statutory liability, fines and penalties. So it's a catch-all policy for the management of your business. Nothing to do with medical malpractice, nothing to do with public liability. It's about you managing your business and making decisions about it and potentially making an error or an issue that lands you in hot water.
And for those people listening that aren't insurance groupies, could you explain D&O?
Directors and officers. So a director and officer, yeah, okay. So a director and officer, like if you own a company, you are a director of the company. Or if you have a company, a proprietary limited company, you are a director of the company and you, under the Corporations Act, required to cover off on, the Corporations Act, when you print it, is this thick. It's the size of a phone book. There's something like 1,200 different pieces of legislation fall under that relate to the management of business and how it trades in Australia.
And you mentioned earlier employment practices liability. Does that differ from management?
Well, it's for us, yes. When you have staff, There's legislation in Australia that tells you how you've got to treat your staff, the standards of how they get paid, superannuation, blah, 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 all those things. But ultimately, if someone is being bullied in the workplace by another staff member, you can be held responsible for that. Even if you've got nothing to do with it, know nothing about it and so forth. This is where your employment practices comes into place, or liability comes into place. And also about the actual employment conditions or non-employment of people. Accusations along the lines of, well, I deserve the job because I'm better at it than that particular candidate, and you didn't hire me because I might be pink with purple polka dots, or those things. And those accusations, whilst they could be absolutely ridiculous and potentially not true, can cost you money defending them, which is where this policy comes into play.
Fantastic. Do you think there's anything that we've overlooked in covering the different type of insurances people need to be looking at for their general practice?
Well, I think they're the basics, and they're the essential things. I mean, if your practice, really every practice is different, and there's other things too, like obviously commercial motor. If you've got cars that belong to the practice, and other bits and pieces that you can get, like personal accident for your directors, corporate travel for people who travel a lot and go to conferences and so forth. There's a whole raft of additional insurances that you could get, but that would be the basics. That's where I would start.
Fantastic. And your advice to general practice owners, if you were to give them one or two pieces of advice from your domain and your experience in this sphere, what would you be advising general practice owners?
I think one thing that probably would set them up for a better experience is probably understanding that insurance, I mean, you talked about it being a grudge purchase before. Really, you've got to get comfortable with your insurance and you have to understand it. So, number one, read the fine print. A lot of people sort of just take the cheapest option. And insurance is that you shouldn't really be doing that, because there's hundreds of different policies, hundreds of different insurers. That means hundreds of different covers, and they won't necessarily fit you as well as the next version. So if it's cheap, there's a reason why it's cheap. And the other things that I think is super important to take into account and really think about is that insurance is not a set and forget scenario. There needs to be appropriate time each year invested in what have I got, what do I need, what's changed, how has my business changed, how does my insurance react to those changes and so forth. So this is something that you probably need to review every year, and it doesn't need to be difficult. Obviously, if you've got an insurance broker, that's a much easier process to go through, and I certainly wouldn't be doing DIY.
Yeah, I think you're right. This seems like a space where, in order to reach a level of proficiency, requires a lot of work. It doesn't make sense that somebody would be spending their time on that. There are a lot more things they should be getting proficient at as owners than how to judge a valuable insurance policy. And so using brokers, I think, are invaluable in this. As you said, an annual conversation should be your minimum expectations, because your circumstances will change, your outlook will change, and your risk profile probably changes over time as well. We'll make sure, Caroline, that how people can contact you is in the notes for this show. I'm really grateful for your time and sharing your wisdom today. Thank you very much.
Oh, thanks for having me, Todd. I really appreciate it. Been fun.
Right.